Download this code from codegive.com, link in the description below. OK, let's dive deep into fair value gaps, FVGs, also known as imbalances, in the context of price action trading. This guide will take you from a complete novice understanding to a level where you can confidently identify, interpret, and potentially trade using FVGs, all with relevant code examples, mostly using TradingView's Pine script. What are fair value gaps, FVGs? At their core, FVGs are price inefficiencies where buying or selling pressure has caused a significant gap in price movement. Think of it as an area on the chart where price skipped over a range, leaving a void that the market is likely to revisit later to rebalance. Why are FVGs important? Asterisk indication of strong momentum. Asterisk FVGs highlight periods of strong bullish or bearish momentum. The size of the gap often correlates with the intensity of the move. Asterisk potential areas of support and resistance. Asterisk FVGs can act as future support levels in a downtrend or resistance levels in an uptrend when price revisits them. The market often fills these gaps. Asterisk high probability trade setups. Asterisk when combined with other forms of technical analysis, like order blocks, trend lines, or key levels, FVGs can significantly improve the accuracy of your entries and exits. Asterisk institutional footprints. Asterisk many traders believe that FVGs are often created by institutional order flow. Large players sometimes need to quickly move the market, creating imbalances that later need to be addressed. The anatomy of an FVG. Asterisk. An FVG is defined by 3 consecutive candles. Asterisk bullish FVG. Asterisk. Asterisk candle 1, normal candle. Asterisk candle 2, a candle with a strong bullish move. Asterisk candle 3, normal candle. Asterisk the low of candle 1 is higher than the high of candle 3. The gap between these 2 points is the bullish FVG. Asterisk bearish FVG. Asterisk. Asterisk candle 1, normal candle. Asterisk candle 2, a candle with a strong bearish move. Asterisk candle 3, normal candle. Asterisk the high of candle 1 is lower than the low of candle 3. The gap between these 2 points is the bearish FVG. Visual representation. Asterisk. Step-by-step identification, manual. 1. Zoom out. Asterisk start with a slightly higher time frame, example 15 minutes, 1 hour, to get a broader perspective of the market structure. It's easier to see the big picture moves first. 2. Identify strong impulsive moves. Asterisk look for large, decisive candles, or a series of candles, that clearly indicate a strong directional move, up or down. The stronger the move, the more significant the potential FVG. 3. Check for gaps. Asterisk after a strong impulsive move, look at the 3 candle sequence. Does the low of the first candle exceed the high of the third in a bullish setup? Or does the high of the first candle fall below the low of the third in a bearish setup? If so, you have a potential FVG. 4. Mark the FVG. Asterisk draw a rectangle, or use a drawing tool, to highlight the gap between the low of the first candle and the high of the third, bullish, or the high of the first candle and the low of the third, bearish. Pine script code for FVG identification, TradingView. Explanation of the Pine script code. Asterisk. 1// at version equals 5 asterisk specifies the Pine script version. 2. Indicator, asterisk declares the script as an indicator, setting its title and overlay status. Overlay equals true means it's plotted on the price chart. 3. Bullish FVG, equals, and bearish FVG, equals, asterisk these are functions that return true if a bullish or bearish FVG is detected, respectively. They compare the low of the second previous candle, low 2, to the high of the current candle, high, for the bullish FVG, and vice versa for the bearish FVG. For bullish equals bullish FVG, and bearish equals bearish FVG, asterisk these lines call the functions and store the results in Boolean variables. 5. Plot shape, plots the shapes above and below the candles that indicate a bullish or bearish FVG. 6. Plot, plots the lines that indicate the exact high and low levels of the FVG. 7. Commented out section, box highlighting this section demonstrates how to use the box.new function to draw rectangles to visually highlight the FVG area. It's commented out to keep the code cleaner, but you can uncomment it if you want to use it. Box.delete, bullish hbox1, deletes the previous box, so you only ever have the latest FVG highlighted. How to use the script asterisk. 1. Open TradingView. 2. Open the Pine editor. 3. Copy the code and paste it into the editor. 4. Click Add to Chart. Now, the script will automatically identify FVGs on your chart and plot them. You can customize the colors and styles in the script settings. Trading strategies using FVGs asterisk. Here are some common trading strategies incorporating FVGs. 1. Retest plays, the classic FVG strategy. Asterisk concept asterisk wait for price to return to an FVG after its formation. The FVG acts as a support, bullish FVG, or resistance, bearish FVG, level. Asterisk bullish setup asterisk after a bullish FVG forms, wait for price to pull back and test the FVG. Enter a long position near the bottom of the FVG. Asterisk bearish setup asterisk after a bearish FVG forms, wait for price to rally and test the FVG. Enter a short position near the top of the FVG. Asterisk stop loss asterisk place your stop loss slightly below the FVG, for bullish setups, or slightly above the FVG, for bearish setups. Asterisk take profit asterisk target a previous swing high, bullish, or swing low, bearish. Consider using a risk to reward ratio of 1:2 or 1:3. Example asterisk imagine a stock makes a strong move upwards, creating a bullish FVG. Price later retraces to the FVG. You enter a long position at the FVG, place a stop loss below the FVG, and set a take profit target at a recent high. 2. FVG breakout plays asterisk. Asterisk concept asterisk trade in the direction of the FVG formation, anticipating that the initial momentum will continue after a retest. Asterisk bullish setup asterisk after a bullish FVG forms, wait for price to pull back and test the FVG. When price moves above the high of the FVG, enter a long position. Asterisk bearish setup asterisk after a bearish FVG forms, wait for price to pull back and test the FVG. When price moves below the low of the FVG, enter a short position. Asterisk stop loss asterisk place your stop loss just below the FVG, for bullish setups, or just above the FVG, for bearish setups. Asterisk take profit asterisk target levels that are in line with the prevailing trend. 3. Confluence with other indicators asterisk. Asterisk combine FVG analysis with other technical indicators like Fibonacci retracements, moving averages, or trend lines. When an FVG aligns with a Fibonacci level or a trend line, the confluence strengthens the trade setup. Asterisk look for divergence between price and oscillators like RSI or MACD. Divergence combined with an FVG test can provide high probability entry signals. Important considerations and tips asterisk. Asterisk time frame matters asterisk FVGs on higher time frames, daily, weekly, are generally more reliable than those on lower time frames, 1 minute, 5 minutes. Lower time frames are more susceptible to noise and volatility. Asterisk context is key asterisk don't blindly trade every FVG you see. Consider the overall market trend, the instrument's volatility, and any relevant news events. Refinement FVGs are zones, not precise price levels. Price might not perfectly touch the exact FVG boundaries. Look for price action confirmation, like candlestick patterns, near the FVG before entering a trade. Failed FVG sometimes, price will break through an FVG without respecting it. This can signal a change in the underlying trend. Use stop losses to protect your capital. Liquidity voids An FVG is a type of liquidity void. It signifies an area where price moved quickly without much trading activity, indicating a lack of liquidity. Markets tend to fill liquidity voids, but not always immediately. Backtesting thoroughly backtest any FVG strategy before using it with real money. Adjust the parameters to suit your trading style and risk tolerance. Combine with order blocks often, FVGs form in conjunction with order blocks, another concept in price action trading. Identifying both can give you a stronger signal. Code improvements and further exploration 1. Alerts add alerts to the Pine script code so you get notified when an FVG forms. 2. Filtering by size add a filter to ignore FVGs that are too small, example less than a certain percentage of the average candle size. 3. Combining with order blocks modify the script to also identify and plot order blocks, and then highlight FVGs that overlap with them. Advanced concepts. FVG mitigation this is when the FVG is filled. Sometimes the market will only partially mitigate the FVG before changing direction, or it might overextend beyond the FVG. FVG invalidation this occurs when price moves decisively through the FVG without respecting it as support or resistance. It signals a potential change in market direction. Multiple FVGs when multiple FVGs exist in proximity, the market tends to react more strongly when revisiting these areas. These areas of confluence can provide high probability trading opportunities. Disclaimer Trading involves risk. The information provided in this guide is for educational purposes only and should not be considered financial advice. Always do your own research and consult with a qualified financial advisor before making any trading decisions. FVGs are just one tool in the trader's toolbox, and they should be used in conjunction with other forms of analysis and risk management techniques.